Institutions are cutting back on stocks, but retail investors, they're doubling down. With $67 billion flowing into equities this year alone, retail traders are betting big on a market rebound, while hedge funds and money managers pull out. Who's right? Is this confidence or a costly mistake? With key tariff decisions and economic shifts ahead, we'll find out soon. And at the end, I'll explain why a rising savings rate might be the real story here.
Gary, moving on to thing number two, we're going to talk about the retail investor market. We're seeing retail investors putting more and more money into the stock market, even when you're starting to see institutions actually reduce their exposure in the current market. Thing number two, Gary, we're calling it confidence overreaction. Retail investors stay bullish. Thing number two.
All right. So, Rob, at the end of last year, retail investors poured $71 billion into the market. That's a really big number. This year, in the first quarter, it looks like that number will be in the neighborhood of $67 billion. Only with the market down, they're getting better prices. That $67 billion has gone into U.S. equities and ETFs. Tesla and Nvidia alone, $5.1 billion in retail buying. So retail investors are consciously betting that the risks that we were just talking about won't derail the market entirely, and that momentary losses aren't seeming to steer them away. And all of this is happening as institutions are exiting the stock market.
Yeah, I mean, the chart, Gary, in the written five things, I think it's just a little over 60,000, or excuse me, $60 billion in quarter one of 2025. All of 2024, we only saw about 150 billion from this same category. So retail investors putting more money in the market. What other thoughts on this? And is data relative to the PCE that we also just discussed in thing number one?
So a couple of things, Rob. One is that professional investors, the institutions and hedge funds, mutual fund managers, they are getting out of the market because they're worried about the uncertainty related to tariff decisions, which, are supposedly coming later this week. But, who knows? These things have been changed so many times, they may change again. I think retail investors have been trained by years of experience to buy the dip. And, right or wrong, that's what they're doing right now. And so, I have 2 points I'd make on this. One, I think it's really interesting that as, professional and institutional money managers are unloading, it's retail stepping in to buy. This is a shift of risk from institutions, from basically Wall Street to Main Street. We'll see who's going to win that one. And then I also think it's really interesting. We were just talking in the prior segment about the savings rate rising while retail investment in the stock market is rising as well. So to me, it looks like Americans are saving more and investing more and consuming just slightly more. But it looks like more money is going into savings and investment than additional spending, which I like to see that. I think that's a great strategy. If you are watching this, to the extent that you are able, it's great if you can spend less than you make and save and invest the rest. Just a reminder, you cannot save in dollars. They will be continually debased. So the purchasing power of the dollars you save today will not buy you as much 3 years down the road, 5 years down the road. But, saving and investing is always a great move to shore up your personal finances instead of spending more. So, seriously, huge round of applause for the American people who decide to give their credit cards a break and are pouring more money into their bank accounts and to their brokerage accounts. Good for them. I hope it works. I hope these end up being the correct profitable moves. But just from an asset allocation and a does this make sense kind of thing, I like to see it. We're cheering for you.
Yeah, I mean, I think you're seeing, Americans tend to be quite resilient and learn what's happening, right? I think you're just seeing the decline of the overall value that you're able to get, in everyday products, food, grocery, going out to eat, going to the movies. And so Americans are looking at it and saying, well, why wouldn't I take those dollars that I was spending on stuff that I'm getting really nothing out of at this point in time into something that's going to set me up
You know what,
for
Rob?
the future?
One thing that I would add to that, look, obviously, we are a channel about finance and investing. We are not a religious or spiritual organization here. But one thing I always like to see is there have been a lot of movements in recent years for people who have decided to live with fewer things. They're living a more simple, more Spartan lifestyle. And I actually think that's a great thing. And, one of the things I talk about is I travel months at a time, and I'm actually getting ready to leave the country for 11 months at a time. And, I live in a very comfortable, large house here in Connecticut. But when I travel, I'm often staying in much more sparse accommodations. I'm living with a whole lot less. I'm living out of one suitcase for months at a time. And the truth is, I'm not less happy. It's okay to have fewer things. It's okay to live a more Spartan lifestyle. And one of the best experiences I had was I was surfing in rural Nicaragua, and the place that I was supposed to stay at, it was supposed to be a nice resort. And I walked in, and, I think I've talked about this before. It was just a cement floor, brick walls, a light bulb hanging from the ceiling, and a, desk that looked like, a 15th century monk would be copying scrolls sitting at. But you know what? Like, I was there. I woke up early. I worked. I read. I wrote. I meditated. I swam in the ocean. I surfed. I got dinner. I went to bed early. I lived a very simple existence, and I enjoyed it.